as he sets out plans for a further gradual reopening of England. Let's take a quick look at futures before markets go live. We're looking at some big gains, 1% plus here in Germany, almost 1% on the FTSE and the CAC as well. Even the drop in U.S. futures right now is only 0.1 of 1%. So you could see that swing higher with a little nudge from European trading. Now, as markets open up live, let's take a look at the global macro mover screen. Equity indexes here in your left-hand column. The FTSE, as always, the first out of the gate up 0.4 of 1%. Spain's IBEX opens up in Madrid up more than 1%. So gains in Spain, maybe pointing to what we're going to see across the rest of the continent. It takes indexes like the DAX, of course, a little bit longer to open up, but we typically get the CAC. There it is, up 0.9 of 1%, and the AAX in Amsterdam open a little bit sooner than that. Italy also typically opens up a little bit before Germany. The Germans are a little bit slow on the uptake when it comes to vaccinating their people and opening up equity indexes. In terms of the stock moves that we saw yesterday in the U.S., the S&P 500 hit an all-time high once again, with almost all of the major industry groups advancing. Mega cap tech stocks rallied, and the NASDAQ 100 jumped 2 full %. U.S. data continues to highlight an economic pickup. We saw the biggest jobs gain in 7 months on Friday for the U.S., more than 900,000. Monday's ISM data showed faster growth, the fastest, in fact, on record in March, as orders jumped to new time highs, and we saw manufacturing last week really soaring as well. So in some cases, the gains that we see are jaw-dropping. Joining us now is Sylvia D'Angelo, Hermes Investment Management Senior Economist. Sylvia, let me first ask you then about the U.S. economic rebound. What are you expecting?
So the U.S. economy has clearly got some impetus, and that mainly reflects the recent fiscal stimulus announced by the U.S. administration, $1.9 trillion of fresh stimulus injected into the economy. On top of that, the vaccination rollout is also proceeding very fast, I'd say. And therefore, the outlook for the U.S. economy is very strong in the short term. And probably we are looking for growth of 6 to 7% this year, after 3.5 contraction in 2020. So a very strong rebound for the U.S. economy in the short term. Longer term, of course, it depends on how the infrastructure plan and other longer-term oriented measures pan out.
So it looks like the Congress can use, or the Democrats can use, budget reconciliation to push through their infrastructure plan. Regardless, the U.S. has seen a ton of stimulus. Trillions is a word, as Howard Marks was saying earlier, that we started using on a regular basis last year because of that. What kind of inflation will we see in the U.S., and will it just be transitory?
Well, my view is that we'll see higher inflation in the short term, and also that it will be transitory, meaning that we have base effects, especially in energy prices. Also, we have probably some supply constraints as sectors that were hit by the pandemic are coming online, and as probably there's demand for some services, very high demand for some services. So in the short term, and of course we also have higher commodity prices. So in the short term, I expect higher inflation. Probably we see 3-handle prints in the next few months. However, there will be these higher prints will be really mainly driven by temporary factors. And as long as there's lack in the labor market and inflation expectations remain quite contained, which has been the case really recently, the overall, I'd say the underlying inflation picture is likely to remain fairly contained.
What are we going to see then in Europe? I mean, when you talk about downward pressure on, I mean, when you talk about downward pressure on U.S. inflation, there are, of course, external factors. And certainly, if you don't see global inflation, that helps with the transitory argument. Here in Europe, we haven't seen nearly the kind of stimulus. Of course, we had social safety nets that made it not as necessary. But what kind of growth is Europe going to see, and what kind of inflation? You know, how close will we get to Christine Lagarde's 2% target?
So, of course, we have seen a strong recovery, I'd say, globally, led by the US and China, while the Eurozone really has lagged. And this divergence between the US and the Eurozone within an advanced economy is really a story that is here to stay, and that will probably gain further traction going forward, with the two blocks drifting further apart. So the Eurozone actually experienced a larger contraction in 2020, almost 7% contraction, so almost double the contraction that the US experienced. And going forward, it's likely to experience lower growth compared to the US. And so here I'm looking for growth of between 4 and 4.5% this year. And well, the main two reasons are quite obvious. So first of all, the vaccine rollout has proceeded very slowly, and there are issues with respect to shortages of doses, and also with some skepticism concerning the mainly available vaccine. And also, of course, the fiscal stimulus has been smaller in size compared to the US, but also less timely. And of course, timeliness matters. The so-called recovery fund has already been approved. It's worth 700 billion euros, but it will take time for the first disbursements to hit really the economies, the European economies that are in need of those funds.
Yeah, not an eye-popping amount, and not money that's even ready to be spent yet. Over a year into the pandemic, Europe certainly works in different ways than the U.S. Silvia, we're going to keep you with us. We have more to talk with you about. Silvia D'Angelo, Hermes Investment Management senior economist, stays with us. I want to quickly take a look at the Stocks Europe 600, because the gains that we see today at the start of the session have been enough to erase the pandemic losses. Here, you're only seeing a one-year chart, so you don't see the full pandemic in this chart, or the full extent of the losses. But trust me, if you were to look at a two-year chart, you would see that we've come back completely. There you go. From the bottom, everything has now been made up. A big part of that has been Credit Suisse, by the way. Credit Suisse shares booming up more than 2% today after heads rolled under Gottstein. Coming up, airlines are dealt another blow as England holds off on restarting international travel amid a surge of virus cases in other countries. And we see airline stocks like KLM Air France down 2%. What impact could that have on the economic recovery in England? That's next. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also, like, we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Welcome back to the Open. Right now, 11 minutes into the session right now, and as you probably just saw before the break, we've erased our pandemic losses on the stock 600. You can see the gains here on the individual indexes as well, with the FTSE up 1.1% and the DAX up 0.8%. A little bit of a different story than the futures told us a half hour ago. Let's take a look into the individual stocks on the move. For that, we go to Bloomberg's Danny Berger in London. Danny?
Matt, one of the biggest movers to the upside so far this morning is Carnival, up more than 5.5%. A little bit of catch up with yesterday's U.S. session. The ADR there rose pretty significantly. One of its competitors planning on resuming U.S. tours in July. They don't have the green light from the government yet, but still some optimism there. Sticking with the travel space, Air France KLM, they did receive a massive bailout from the government, a $4.7 billion investment, becoming one of the biggest shareholders, but it's falling more than 1% today. That might be because the UK perhaps pushing back when they'll allow for international travel, so travel and leisure taking a dive there. Finally, Credit Suisse, a really volatile beginning trading session for the company. It started up 2%, now down around 0.5%. They're, of course, dealing with the fallout from Archegos, announcing that they're slashing their dividend and cutting buybacks, and also some cuts in terms of personnel at the very top. Let's take a look at the overall market, though, because as you say, Matt, Stock 600 erasing its pandemic loss. Again, this is another case of some catching up from the U.S. session, where we saw the tech giants propel the U.S. indices to new records. U.S. futures are trading lower today, but still the overall market getting a bit of a boost from those lower U.S. 10-year yields, now below 1.7%, Matt.
I don't know if anyone has tape of Bill Wang saying Archegos, but I know that there are so many different ways of pronouncing it. I'm sticking with Archegos, and I'm going to say he probably said that too. I imagine him at the Four Seasons having lunch with Julian Robertson saying Archegos. That's just my own, the way I perceive he would have said it. But, stick with Archegos if you like. I know that's probably one of the many directives. Danny Berger joining us there from London. Now, speaking of, UK Prime Minister Boris Johnson has outlined the pathway out of lockdown for England. He confirmed that some restaurants, pubs, and even non-essential shops will open again next week, while a ban on foreign travel is set to remain until at least May 17th. Johnson hasn't ruled out that could be extended if infections continue to surge elsewhere.
We can't be complacent. We can see the waves of sickness afflicting other countries, and we've seen how this story goes. We set out our roadmap, and we're sticking in it. We don't want to see the virus being re-imported into this country from abroad. Plainly, there is a surge in other parts of the world, and we have to be mindful of that. At the moment, things still seem set fair for May the 17th, but we will keep everything constantly under review.
'Cause I know that there are so many different ways of pronouncing it. I'm sticking with Archegos, if you like. I know that's probably one of the many directives. Danny Berger joining us there from London. Now, speaking of, UK Prime Minister Boris Johnson has outlined the pathway out of lockdown for England. He confirmed that some restaurants, pubs, and even non-essential shops will open again next week, while a ban on foreign travel is set to remain until at least May 17th. Johnson hasn't ruled out that could be extended if infections continue to surge elsewhere. We can't be complacent. We can see the waves of sickness afflicting other countries, and we've seen how this story goes. We set out our roadmap, and we're sticking in it. We don't want to see the virus being re-imported into this country from abroad. Plainly, there is a surge in other parts of the world, and we have to be mindful of that. At the moment, things still seem set fair for May the 17th, but we will keep everything con Silvia Dall'Angelo from Hermes Investment Management is still with us, a senior economist there. And Silvia, England has done exceptionally well, especially when compared to its former European mates here in terms of vaccinating the population. Of course, it's important to remember how poorly England did in terms of slowing the infection rates. But what does the economy look like in the UK compared to that of the continent?
So we spoke about the divergence between the US and the Eurozone earlier, and I think that the UK lies somewhere in between. So as you suggested, the UK initially tackled the pandemic quite poorly. And so last year, the response in terms of lockdown was quite disappointing and I think also unclear. But since then, there has been, and of course, as a consequence, the performance last year was quite poor, with the UK economy contracted by 10%, the largest annual contraction in 300 years. However, the outlook is much better now. The vaccine rollout has proceeded very quickly, I would say, with almost half of the population now having received a first dose of vaccine. And also the fiscal stimulus has been quite forceful. I'm quite positive about the UK economy this year, and we'll probably see growth rates of between 5 and 6%, with the economy going back to its pre-pandemic level at some point early next year.
You know, we were talking about the stimulus spending that the EU has earmarked, which is a nice sign of commitment, although it's not ready to roll it out yet. Hillary put together a chart for me earlier showing debt to GDP of a number of countries, the US, the UK, Germany, France, and Italy. It's surprising when you look at how strong the German fiscal situation is. Germany is the lowest line on this chart, debt to GDP of only 70%. Meanwhile, Italy, you know, the US is almost as bad as Italy in terms of debt to GDP. It's much easier to do that when you have a world reserve currency. But is there more room for fiscal spending across Europe, Sylvia? I mean, with Germany especially in such a strong position, even France and the UK look better than the US and Italy. Could we see more fiscal spending on the continent?
Well, I think there is room for more fiscal spending in the continent, but it's more of a matter of whether there's willingness really to spend more. And the big issue for the Eurozone is that the institutions really are not up to the task. So it's fairly straightforward to approve fiscal measures elsewhere in the UK, in the US, but that's not the case really in Europe. At the national level, we have the Stability Pact, which put some limits, and of course that was suspended for the pandemic. But at the European level, clearly there are still significant shortcomings, and so decision-making in terms of fiscal is really slow, cumbersome. And so even though there's room, it's not clear that whether it can be used that easily.
Well, maybe they'll speed that up a little bit as a result of the sloth we're looking at right now. Silvia Dall'Angelo, Hermes Investment Management Senior Economist, thanks very much for joining us. Silvia will continue the conversation with us on Bloomberg Radio at 9 a.m. UK time, so tune in to hear more from her. Let's get right now the Bloomberg Business Flash. For that, we go back to Laura Wright in London. Laura?
Thanks, Matt. Air France, KLM, is to receive as much as €4 billion as part of a recapitalisation plan for the indebted carrier. The European Commission says the airline will get up to €1 billion in fresh capital as part of a shareholder subscription and convert a previous €3 billion French loan into hybrid instruments. As part of the plan, the French government could become the company's biggest shareholder, raising its stake to as much as 30%. We speak to CEO Ben Smith on Bloomberg TV later this morning. BP says it expects to have reached its $35 billion net debt target during the first quarter of this year. Hitting the target means the oil major can restart share buybacks. BP says the achievement is down to earlier than anticipated disposal proceeds and what it calls a very strong business performance driven by trading and prices. BlackRock is examining its business to see how it may have contributed to racism in the financial system, breaking ranks with its Wall Street peers. The world's biggest money manager is planning to undergo an independent racial audit of its operations following a shareholder request. By contrast, Goldman and Citi have asked shareholders not to back similar audits, saying they've already taken steps to address racial injustice. That's the Bloomberg Business Flash. Matt.
Laura, thanks very much. Laura, right there with your business flash. Coming up, we're going to get more details on the shakeup at Credit Suisse as the bank grapples with steep Archegos losses, or maybe they're steep. We actually don't have enough details to tell you what kind of losses they're looking at, but we'll find out. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
It is highly likely that we are going to have another situation like that. You know, these things, when they come, we're experiencing Sonali, where out of the blue you hear of some major loss somewhere, they tend to continue to cascade until the market corrects and flushes the risk out of the system.
Guggenheim Chairman Scott Minerd there, saying it's only a matter of time before another firm implodes in a manner similar to Bill Wang's Archegos Capital Management. Let's get back to the latest on one recipient of the trouble from that implosion, more like an explosion, really. Credit Suisse, the lender, is facing a devastating fallout on the collapse, let's say, of Archegos, and a big shakeup is underway. Joining us now is Bloomberg's finance reporter in Zurich, Marion Halftermeyer. Marion, let me first ask you about the kind of losses that we think Credit Suisse has experienced. Do we know even ballpark figures as to the problems this will bring with it?
Yeah, so they've announced this 4.4 billion Swiss francs charge related to Archegos. That, I mean, you have to put that in context. That's, more than a year's worth of profit. We're also probably going to be having a net loss with the first quarter earnings that are going to be published in a couple of weeks from now. That follows a fourth quarter loss already that was a surprise to investors. So this isn't looking good. But for the moment, analysts seem to say that they're sort of safe for now with regards to capital. There were some questions around, potentially needing capital raise. Were the regulatory capital ratios going to be decreasing to the point that regulators would be concerned? For the moment, it seems like they're safe.
All right. They have had, of course, other problems. This is really a 1-2 punch, and as a result, heads are rolling in the C-suite. What kind of changes are we seeing in terms of personnel, and will it satisfy shareholders?
Yeah, so we're seeing some big changes, a couple of changes on the executive board. So the chief risk officer, the head of the investment bank, both are leaving. You're seeing a couple other people being placed in interim. So I assume we will see some more permanent placements as the months come on. For the moment, I think it's the moves that investors were waiting to see. I'm not sure it restores confidence completely. That remains to be seen in terms of, what other things might come out of this, whether there's more hits to come related to this or not, and whether, investigations might point to more responsibility to more executives.
All right, so Greensill and then Archegos, forcing a number of people out of their jobs here, but Gottstein is safe. Bloomberg's finance reporter in Zurich, Marion Halftermeyer, thanks for your continued coverage. Coming up, President Joe Biden is aiming to drive down carbon emissions through a sweeping infrastructure plan, despite Republican opposition. We'll have that story next. This is Bloomberg.
Good morning, traders. It's time to place order. And if you're looking to trade Bitcoin, I'm going to sell short Bitcoin, and the price I'm looking to sell is 59,000.75. Okay, so I'm placing an order. So if you want to sell short Bitcoin, here's your chance to sell it at 59,007.5. Okay, so you still have time with Bitcoin, like I said, for newbies, for new traders who just started follow our trades. We were not calculating our profit based on pips with Bitcoin because it's kind of volatile. We calculate our profit based on percent, 0.1%, 0.2, and so on. So you still have time. If you want to enter this trade, here is the price I'm looking to sell, 59,007.5. Stay safe.
Join Politics ist ein überparteiliches Startup, das nach politischen Talenten sucht und sie fördert, um Lösungen für die großen Fragen unserer Zeit zu entwickeln und diese auch politisch umzusetzen. wir glauben, dass die Förderung von politischen Talenten mit guten Ideen wichtiger ist denn je zuvor. Wir sehen auf allen extremen Enden laute Stimmen, die polarisieren und die Menschen auseinanderbringen. Und wir wollen die Personen fördern, die wirklich konkrete Lösungen entwickeln und für die Mehrheit der Gesellschaft einen Weg aufzeigen in eine positive Zukunft.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Welcome back to Bloomberg Markets. This is the European Open. 30 minutes into the session, you can see that stocks are gaining across the board, and certainly the stock 600 has erased its pandemic losses. You can see the headline on the bottom of your screen there. We're back up to an all-time high for the broader European benchmark index, the stock 600, after it makes up everything it's lost since the start of 2020. Let's take a look at which sectors are on the move with the GRR. This is the group ranked returns screen on the stock 600. You can see basic resources are doing the best. Auto makers and auto parts makers are up as well today, and banks are gaining as well as insurance. FB&T stands for food, beverage, and tobacco, which always seems to be a pretty good bet. You need those things unless you have managed to break the habit, in which case I commend you. Let's get the Bloomberg First Word News right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. North Korea says it won't participate in the Tokyo Olympics in order to safeguard its athletes from COVID-19, making it one of the first countries to skip the games because of the pandemic. In the US, New York City's vaccination program picked up speed last week, reporting a record of more than 500,000 doses administered. Brazil, meanwhile, says it will vaccinate 2 million people per day next month, a doubling of the planned rate for April. Officials from Iran and the US are set to gather in Vienna today as they take part in talks to end a crisis over 2015's nuclear deal. Both countries will attend negotiations with the accord's remaining parties, the EU, Russia and China. Iran is demanding the full removal of sanctions over its nuclear program. The US, meanwhile, has ruled out any unilateral gestures. US Treasury Secretary Janet Yellen has outlined the case for a uniform corporate tax rate across the world's major economies. In her first major speech on international economic policy, she said the US is working with G20 nations to find an appropriate minimum rate. She also signaled out China, saying the US needs a strong presence in global markets to level the playing field. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Matt.
Laura, thanks very much, Laura, right there in London. Now let's get the latest on the energy transition. U.S. President Joe Biden has placed a shift to green at the heart of his U.S. agenda, but he's facing Republican opposition in his bid to pass a $2.25 trillion infrastructure plan. Joining us now is the head of EMEA Research at Bloomberg New Energy Finance, Thomas Rollins-Rees, to talk about this plan. So Thomas, is this a step forward from the point of view of the U.S. government's support for clean energy? Is it a bold step?
I think the real, excuse me, I think the real bold step forward was on some of the campaign promises that Biden made in terms of ambition. This plan, to some extent, is a reiteration of those promises, and I say that because there are a lot of areas where it still lacks detail, and we're left guessing as to exactly how some of these ambitions are going to be translated into policies and implemented. That said, there is a little bit of flesh on the bones in places, and it's also interesting to see the things that are not in the plan, because we can fairly surely say that won't be translated into legislation. So there's not a price on carbon being put forward. But irrespective of the amount of detail, this will have to be translated into legislation. Nancy Pelosi wants to have something passed by the 4th of July. For it to happen that quickly, there would have to be a lot of things jettisoned for it to be able to get through the sort of negotiating process with the Republican Party in Congress.
What about, we're looking at some pictures of wind and solar. I will note that wind energy looks a lot cooler than solar fields, but are we likely to see the needle moved on this kind of energy production?
I mean, so Biden had, in his campaign, promised to decarbonize the U.S. power sector by 2035, which is really ambitious.
Wow.
And the plan here, it contains provisions for tax credits to support wind and solar. And that is significant, and it's a necessary part of that goal if it's to be achieved. But tax credits are sort of the least controversial part of any sort of renewable energy plan, in that they already existed. And what his plan is pledging to do is to extend those. The other problem is they're a slightly sort of blunt instrument. They can help certainly get a lot of wind and solar built. Do they get it built in the right places to the right extent? They're less precise. So the other thing that was in the plan that was mentioned almost in passing was having some kind of federal clean energy standard, which is a little bit more like where the tax credits are like a carrot for wind and solar developers. The clean energy standard is like a stick for utilities. Now, that is what would really get the U.S. to decarbonize that rapidly, but it's likely to face a huge amount of opposition in Congress.
There is also a plan pledging $174 billion towards electrified transportation. I guess this spans all manners of transportation, but EV makers, should they be rallying in terms of what was expected and what we got?
I think that they'll be happy to know that there are tax incentives and rebates for consumers at the heart of the plan. I mean, typically, U.S. policy around EVs has sort of two elements. Again, to use the carrot and stick analogy, the carrot are these rebates, the stick are fuel economy standards, and the fuel economy standards are what will really move the market. The rebates are what maybe makes it less painful for the EV makers. And so, they will welcome that those rebates are included in this plan. There's no mention of fuel economy standards, but we know that that's something that is likely to be discussed around July as well. The other thing that's interesting there is that, in making this pledge, like so much in the plan, it mentions almost in passing without giving much detail that this will be targeted at American-made vehicles. It doesn't give very much detail of how exactly that's defined, because car manufacturing is such a global business. But I think an interesting thing to note is that 50 to 60% of the electric vehicles sold in the U.S. are Teslas. So if the government is planning to put a lot of money towards supporting the growth of the EV market, and in particular if it's focusing on U.S. companies, there has to be some careful thought about how to make it, how to help the sector develop beyond one company. Otherwise, it really will be a lot of government money being shoveled into just one company's pockets.
Well, that's part of the brilliance of Elon Musk, right? He's managed to be able to work those levers to his benefit, but you can bet there's a lot more EV production coming online at General Motors, at Ford, at Volkswagen, etc. And these are companies that sell a lot more than 184,000 cars a quarter. So that number is likely to change. Thomas Rowlands-Rees, great to get your insight here, head of EMEA research at Bloomberg New Energy finance. Thanks very much for joining us this morning. Hope we get you back on more often in the future. Coming up, he mentioned Tesla. We'll talk about those deliveries. First quarter delivery figures blow past analysts' estimates. But the number is still, compared to a traditional car maker, not terribly impressive. We'll talk about that. And the stock. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know that racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
I spent a lot of time last year to just listen, to understand, to reflect and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the US, we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
Tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, early edition. Weekday mornings on Bloomberg Television.
Welcome back to Bloomberg Markets. This is the European Open. Right now, 42 minutes into the session at an all-time high on the Stock 600 after the European benchmark index, broader benchmark index, erased its pandemic losses. Let's get the Bloomberg Business Flash right now. For that, we go back to London and Laura Wright. Laura?
Thanks, Matt. Well, heads will roll. Credit Suisse is to take a $4.7 billion write-down tied to the implosion of Archegos Capital Management. Two top executives are also to go after a series of scandals raised questions about the bank's risk management. The shakeup comes as Credit Suisse posted a pre-tax loss of about 900 million francs for the first quarter and cut its proposed dividend. Air France KLM is to receive as much as 4 billion euros as part of a recapitalization plan for the indebted carrier. The European Commission says the airline will get up to 1 billion euros in fresh capital as part of a shareholder subscription and convert a previous 3 billion euro French loan into hybrid instruments. As part of the plan, the French government could become the company's biggest shareholder, raising its stake to as much as 30%. We speak to CEO Ben Smith on Bloomberg TV later this morning. BP says it expects to have reached its 35 billion net debt target during the first quarter of this year. Hitting the target means the oil major can restart share buybacks. BP says the achievement is down to earlier than anticipated disposal proceeds and what it calls a very strong business performance driven by trading and prices. Goldman Sachs is to expand its Nordic headcount by 40% as it targets a bigger share of asset management and investment banking services in one of the world's richest regions. The bank has told Bloomberg the expansion means Goldman will have 70 people spread across offices in Copenhagen and Stockholm by the end of this year. That's the Bloomberg Business Flash. Matt.
Laura, thanks very much. Laura right there with your business flash. Now, over the weekend, Tesla reported stellar first quarter delivery numbers for EVs. They blew past analyst estimates and helped the company defy a sell-off in the broader EV industry. Shares of the company jumped on the report, erasing most of its year-to-date losses. Over the past year, the stock has advanced over the past 12 months, more than 600%. Joining us now for more is Craig Trudell from our Autos team. He runs the coverage for us here in Europe, but has covered cars on many different continents, in Japan, in Detroit, and now for us here in Europe. Craig, why was this deliveries report such a big surprise? Surely EV sales are on the upswing.
Yeah, I think there was definitely a big surprise from the perspective that you did have some production shut down during the quarter that Bloomberg first reported on back in February. There was some concern that all of the chip shortage that you've heard one company after another talk about downtime related to that. There was I think some concern just that the usual sort of seasonal factors of the first quarter tends to be the weakest for the industry in general and for Tesla in particular. But I think Tesla managed to surprise a lot of people because you didn't see the usual drop off from the fourth quarter to the first quarter. You actually saw a slight uptick, which means they had their best quarter ever in terms of deliveries, and that really surprised a lot of people because you did hear some people talk about maybe around 160,000 was maybe a sort of a low ball number that was expected. For them to almost deliver 185,000, that's obviously a pretty substantial difference between what the concern was among some of the more bearish voices out there.
How quickly are other car makers going to catch up, Craig? I know that Volkswagen wants to sell next year, I think, or next year double the amount of EVs that Tesla puts out. We were just talking with New Energy Finance, and Thomas Roland Rees pointed out that Tesla is still 50% of EV deliveries in the U.S. Surely that it won't stay that way for much longer.
Yeah, they're really dominant in the U.S. I do feel that the likelihood that they're going to remain really dominant in the U.S. is probably pretty high because you have a situation where a lot of the newer models that are coming out are higher priced ones. You've seen a lot of really positive reviews for the Mustang Mach-E, for example, but that is still a model that's sort of just getting going, that is going to be capacity constrained and is priced a bit high to do serious volume, whereas with Tesla, you have the Model 3 that the company has cut price on a fair amount. The company has been pretty clear about the idea that it's willing to really, sort of sacrifice profitability for volume and does really want to crank out a lot of cars. And so there is, I think, an expectation that Tesla will continue to be dominant in the U.S. But when you ask about, how the rest of the industry is going to catch up, what we've really seen is a different story here in Europe, where Volkswagen, as you mentioned, has an aspiration to sell 1 million EVs and plug-in hybrids this year. They're going to give Tesla a run for their money globally. They're also making the ID.4 crossover in China, so they're really going to be ramping up this year as well.
I'll tell you what, the Mach-E, the Ford Mustang Mach-E, they can't make them fast enough. You can't get them to the dealer's lots, and even when you see one on the lot, it's only a base model, and the dealer is upcharged $10,000 or $15,000. So, they really need to boost their production, and the chip shortage isn't helping. How much of a pain is that chip shortage for the EV push? I know, even for traditional internal combustion engine car production, it's a real problem.
Yeah, it's significantly more content in electric vehicles, and I think that's one of the things that's going to be a sort of point of concern going forward for Tesla is the chip shortage situation got worse. It has not gotten better, and to what extent does this become an issue actually going forward? Does it have more of an impact on Tesla in the second quarter and third quarter maybe than it did in the first quarter? And we didn't get any commentary from the company in its very short release, which is typical for them to be fairly tight-lipped in their production and deliveries commentary. But we didn't, hear anything from the company about how this situation is affecting them. They were also fairly vague during their fourth quarter earnings call about to what extent they may be impacted. So that is still a concern going forward for them. The other is the Model S and Model X, which they've announced a refresh for those models. One sort of point of concern perhaps in the release was they made 0 Model S and Model X during the first quarter. So there is a little bit of concern about just how long that's going to take for them to ramp up those models. They've talked about them being well received, but how quickly is the company able to sort of meet that reception with ramped up production? They talked about being in the early stages of ramping up. So a question as to how much we're going to see for Model S and Model X in the second quarter.
Craig, thanks very much for joining us. Craig Trudell leads our autos team coverage here in Europe, talking to us about Tesla, the EV push, and the chip shortage as well. Coming up, we're going to get back to the markets as the Stock 600 erases its pandemic losses entirely and rises to a fresh all-time record high. This is Bloomberg.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Trading revenues coming in better than expected. Everything. Cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Welcome back to Bloomberg Markets. This is the European Open. We are almost an hour into the session now and looking at pandemic losses erased on the Stock 600, all time new highs hit on the broader European benchmark and gains of 1% or more on the FTSE and the DAX, as you can see. So big gains across the board. Joining us to talk about the equity indexes and more is Laura Cooper from our MLive team. Is this just catch up, or are we just playing catch up to the U.S. records hit yesterday, Laura?
Well, I certainly think that is the case, just because we did see quite exceptional price action in the U.S. on the back of that robust U.S. data, that there is scope for some catch-up. But I would question, whether we're going to continue to see the exceptional pace of gains that we have seen. Because if we look back over the past quarter, a lot of the Stock 600 gains have been driven by banks, by autos, and by those travel and leisure sectors, climbing about 20%. So given the fact that we do have these renewed lockdowns, we do have this sluggish vaccine rollout, we could potentially see some stumbles after some catch-up today, even if the ultimate story is that Europe is going to recover. And yes, there is still a cyclical story for the broader European equity backdrop.
The recovery in the economy that we're seeing in the U.S. is certainly eye-opening from the numbers that we saw. The ISM numbers last week and this week, the non-farm payroll numbers that we saw last week. What does that mean in terms of yields?
Well, certainly, we're seeing yields kind of in the steady state this morning around that 170 range. So we're not really seeing that growth impulse feed through to treasuries today. But I would caution against reading too much into that. I do still think that there is a great deal of upside to be priced in terms of that U.S. growth backdrop. So given the fact that, yes, inflation expectations are quite high, it's limited question how much those can further climb. But really, given the fact that we could potentially see a U.S. economy growing at that 7 or 8% mark, that does suggest that real yields, which are still deeply negative, can climb. And ultimately, that should propel the U.S. Treasuries higher to about that 2% handle, likely through the end of the year.
What kind of answers are you getting to your question of the day? What does the dollar need to keep rallying? What are clients telling you?
Well, there's certainly mixed responses with respect to that question. It's quite a diverging topic. But clearly, I think rising real yields are a key catalyst to have that further dollar upside. That was a key factor underpinning dollar gains through the first quarter, and that is likely to continue to extend. But then once we do see that European recovery take hold, once we do see those recoveries to gain traction elsewhere, we should see more of those flows shift away from the U.S. So ultimately, that should bring the U.S. dollar under pressure, and we will have those deficit fears come back against the greenback. But for now, I do expect that we're going to see just that near-term momentum, given the fact that we do have just this strong, exceptional growth outlook in the U.S.
All right, Laura, thanks very much for joining us. Laura Cooper there from our MLive team as European stocks hit all new record highs, catching up a little bit to the U.S. It's it for the European Market Open. Surveillance Early Edition is up next. This is Bloomberg.
It's such an interesting new world.
The world is changing.
For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
I have asked the Securities and Futures Commission and the Hong Kong EX to work together to explore the viability of our own Hong Kong version of SPACs. We remain very confident on the competitiveness of the Hong Kong stock market.
The world has to come together to bring the COVID pandemic to an end everywhere.
On that basis, I can confirm that quarantine-free travel between New Zealand and Australia will commence in just under 2 weeks' time.
We can't be complacent. We can see the waves of sickness afflicting other countries, and we've seen how this story goes.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning and welcome to Bloomberg Surveillance, the early edition on this Tuesday, the 6th of March, actually 6th of April. I'm Francine Lacqua in London, and here's what's coming up on today's program. The hits keep coming for Credit Suisse. The Swiss lender says the Archegos implosion will cost almost $5 billion. It says it will cut its dividend and replace 2 top executives. Wiping out the losses, European stocks hit a record high with the Stock 600 wiping out its pandemic slump. Warnings emerged from Howard Marks, Nuria Rubini, and Carson Bloch about froth in the market. Plus, Air France gets 4 billion euros from the French government after getting EU approval. We speak to the European Economy Commissioner Paolo Gentiloni a little bit later on in the program, and then the airline's chief executive just after 10 a.m. UK time. So, quite a lot going on in the markets for this Tuesday after a lot of European bourses were closed because of Easter Monday. A big shakeup. We start with that underway at Credit Suisse. The lender hit hardest by the collapse of Archegos Capital Management this morning announced sweeping changes, including a dividend cut and an overhaul of some key personnel. Well, joining us with the very latest is Danny Berger. Danny, what losses is Credit Suisse actually facing, and how is that playing out in today's trading action?
Francine, they're likely facing, as you mentioned before, $4.7 billion. And as I was speaking, our charts guru, Hilary Clark, right now is showing us just how much that was. So this is their quarterly profit, and it won't even fit on the screen how much $4 billion is. To give you an idea, last year their net income was $2.8 billion. So this loss just from one client, just from prime brokerages, is enough to wipe that out. So for the quarter, they're likely facing about 900 million Swiss franc loss. Let's go ahead and look at the next chart, though, which is the share price so far this morning. It's been a really volatile session. It actually opened up higher, now only down about 0.1%. That's not a lot, but analysts have said, look, a lot of the bear case is already priced into Credit Suisse. Yes, they are now slashing dividends. Yes, the buybacks are put on hold, but perhaps this isn't the worst case scenario. Of course, the entirety of the fallout, the entirety of the costs, we might not know that for a while later because there are just going to be a lot of operational costs going on. They're launching an investigation, for example, into both Greensill and Archegos. So that is going to add up over time, not to mention things like legal fees as well. And they're set to give an update in a couple days on Greensill and the type of repayments we're likely to see because of that fallout.
Talk us through some of the personnel changes at the bank, Danny.
So these are happening very much at the top, of course, not at the very, very top, but 2 of the big people to be departing is Brian Chin, Credit Suisse investment bank chief, as well as Laura Warner, who's the chief risk officer. A memo seen by Bloomberg also outlines a couple other departures. A lot of them have to do with risk management as well. In terms of compensation, exec bonuses also on the chopping block. Roner, the chairman, also forgoing his 1.5 million Swiss franc fee as well for being chairman. So a lot of that money not being paid out, which again is perhaps part of the reason that shareholders are not necessarily selling shares as hard as we might expect. Capital situation still looking okay as of now.
How much, if any, of the blame seems to be falling on the chief executive himself, Danny?
Well, look, Gottstein, I don't think was expected by any means to be departing because of this. He did express some pretty strong words in the statement issued today, saying, I recognize that these cases have caused significant concern among all of our stakeholders, ending by saying serious lessons will be learned. I mean, it's a very difficult situation he was put in. 2021, he said, was supposed to be the blank slate for Gottstein, considering that 2020, he still had these legacy issues of spying as part of the reason he took over, of course, but he's just had to deal with scandal after scandal at this point, Francine.
Danny, thanks so much. Our Danny Berger there with the very latest from Credit Suisse. Now, joining us is David Serra. He's Algebra's chief executive and, of course, a bit of an expert when it comes to all things banks. So we're very lucky to have him on a day like today. David, thank you so much for joining us. First of all, what do you make of Credit Suisse when you look at, the turmoil that this bank has been because of Greensill? Will it be enough to have two people from the executive team departing?
Listen, I think the key issue is to understand how is it possible that a single family office, when in reality it was a sole trader more than a family office, could create a loss of 4.7 billion, which is basically 15% of the core equity tier 1 capital of the bank. And so I think there has been, in my view, a fault across basically every risk line. And this, to me, what really has to be addressed first. The second issue regards the risk culture inside the asset management on Greensill. The allegedly, supply finance chain was rated risk 1, so basically zero risk and zero downside, for something rated AA, which had all-in fees of 7% a year. And anyone in our industry knows that, AA and zero risk, today it's minus 50 basis points and not 7% a year. So clearly, look like more fraud than an investment. And so I think these are, in my view, the two questions that need to be asked at heart. How is it possible that so many smart people inside the institution have failed to see, such, in my view, a clear red flag? Then the last point I make is York was, New York created the first, the loss they took in the fourth quarter, Archegos out of New York again. And if I see the history here of Swiss banks over the last 25 years, most of the losses always came out of the US, whether it was AAA, mortgage-backed financing for UBS about 10 years ago, and in this case now Archegos for Credit Suisse, they don't come out of the wealth management core business. They always come out of New York trading activity.
But Davide, so what are you trying to say? That actually that we need more regulation for banks, or that the banks feel like they're getting as greedy as they were in 2008? Like when you ask yourself, how could this happen? How did we let this happen? Who's to blame?
Well, I think, who has to blame, first of all, it's Credit Suisse management. Because, if you see what happened, the losses were not incurred by Goldman Sachs or Morgan Stanley. So Credit Suisse is to blame. Secondly, it's the Credit Suisse, in my view, New York culture inside the investment banking division. Is too much risk for not enough gain. And third, I think it's in the case of Greensill, there are so many red flags that were overlooked that, in my view, says there is a deeper issue inside the institution that has to be addressed. Then the good news is the capital position is stable at 12%. They had clearly a great quarter in the first quarter that mitigated the massive loss, and hence the firm is on stable footing and can rebuild from here. There will need to be clearly adjustment on the risk-taking activity, and in particular on single names. On the regulatory side, regulators have forced their view on asset managers and any regulated activity. A firm like us with $18 billion, I think, makes more than 400 filing between regulatory and compliance yearly. And then you can have a single person which has, $80, $90 billion exposure, $60 billion debt, and simply because he changes his name, disclose zero to the industry. I think clearly something, whoever borrows money from bank at a certain level needs to provide disclosure. I think there's no way out. And I think here regulators will have to enforce the same regulation they impose on regulated activity also to so-called family offices.
All right, David, do you own anything Credit Suisse, and do you actually think that more executives at the bank should go, the top tier?
So we do own quite a lot of additional tier one in Credit Suisse. We're very comfortable. The capital buffer they have remain high. We have high esteem in FINMA and the Swiss Central Bank to do what is right to protect capital. I think, you have a new chairman coming. The CEO has been there for a year to clean his Swiss. Is a person that, through his career has always been, aligned to Credit Suisse, but most importantly, risk conscious. And so I think you will need a cleanup of the extreme risk culture that feed into particular markets and probably what appear to be too good to be true in some other division. And I think it will have to refocus even more on the wealth management side, which is the core of the bread and butter of the franchise of the business.
David, we also spoke to the Guggenheim chairman, Scott Minerd, and he told us that it's only a matter of time before another firm implodes in a manner similar to Archegos Capital Management. Have a listen.
It is highly likely that we are going to have another situation like that. These things, when they come, we're experiencing Sonali, where out of the blue you hear of some major loss somewhere, they tend to continue to cascade until the market corrects and flushes the risk out of the system.
David, did you agree with that? Are there more Archegos out there waiting to implode?
So first of all, I know Scott and highly respect him, and I tend to agree with him. And the reason is, I don't know whether it's going to be a single family officer, but clearly, 7-8 years of negative interest rates and quantitative easing, and now more than $30 trillion printed across central banks globally, in my view, has created too much risk appetite. I think we're getting to a level where negative rates are creating almost more financial risk than they're helping. And I think with the inflation print globally, the strong recovery, I do expect rates to start normalizing over the next 2 to 3 years, which is not expected by markets. One of the negative consequences of having ultra-loose monetary policy is that then you can have, someone with stocks, geared 10 to 20 times. That's clearly a massive bank failure, but it's also a sign of a time. If interest rates were slightly zero or slightly positive, that strategy would not be able to carry. And as we have seen in March last year through COVID, when even the treasury market got under attack and basically became dysfunctional and the Fed has to step in, that to me means there is way, way too much leverage in the system, which is a function of negative rates and probably too much loose monetary policy that feeds into ETF, passive, and banks. I think anyone who's active today will be running cash. For example, we have more than $2 billion in cash out of $80 billion of assets. We've always been running cash, always, at any point in time. I don't know who anyone with his own capital would run on leverage at this point in time in the cycle.
Okay, Davide, thank you so much. We'll get back to Davide Serra of Algebris to continue this conversation, and we'll have plenty more also on other European financials. Now, coming up, frothiness in the markets is everywhere, at least according to Stern Business School's Nouriel Rubini. We'll hear from that interview next. We talk more with Davide Serra. And then a little bit later on, the EU Commissioner for the Economy, Paolo Gentiloni, joins this program. We'll ask him about the EU's recovery plan, this morning's announcement also of a bailout for Air France. This is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally. which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our two main hubs, but across the region.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing out at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim, we're going to be riveted to that, and we're going to do what is required.
I mean, it's like saying that we have a credit card. The United States has a credit card with an infinite balance capability, and you never have to pay it off. It sounds too good to be true. And if somebody offered me that credit card, I would look for the catch.
Oaktree Capital's Howard Marks there expressing concern over the levels of U.S. government borrowing, and investors on all sides of the market really are starting to sound alarms as global stocks near records. Nouriel Roubini, professor at NYU Stern School of Business, also told us this morning that risk is starting to get unmanageable.
We're seeing widespread frothiness, bubbles, and risk-taking and leverage. This is the phenomenon you see with the cyclically adjusted P ratios now being at levels they haven't seen since 1929 or 2000, when there was a bust of bubbles. We've seen now this frothiness in other financial markets, the SPAC phenomenon, the crypto phenomenon, the blow-up of some hedge funds. So I think there is generalized frothiness as money is very easy, liquidity is very easy, and people are taking too much risk.
We're back with David Esther of Algebris. David, this kind of goes back to what you were saying about some of the risks out there and the fact that this ultra-loose monetary policy at some point will cost us. Well, what makes you worried about financials in general right now? Is there something that you prefer to make sure that actually, come central banks starting to normalize, you're still protected?
So I think, central banks have done a fantastic job, in particular over the last 18 months. And when they stepped in, basically filling the gaps due to the pandemic crisis, and all, I think, authorities. I think now here, though, who needs to take leadership? It's the fiscal side, governments, because we need vaccine, we need a green transition, we need real stuff, changes that you can touch. It's not the question of having negative interest rates, which is basically a fake creation out of central banks. It's like a stealth tax that nobody can see. And so I think a more balanced world would be a world where basically you have more fiscal, you have more vaccine, you have green transition, you spend money on education, on security, and at the same time you increase rates from negative to slightly positive, and probably you increase slightly corporate taxation. I think this will be a better policy mix rather than having ultra low corporation taxes, ultra low interest rates, and very little fiscal. Because the reality is we're real, we're humans, we have corporation, and we live in the real world. And I think too much has been focused on the digital world, in my view. And I think we will see a rebalancing over the next 1 to 2 years.
Rebalancing also with Europe playing catch-up. So at the moment, and this I know is very short-termist, but it's what the markets are looking at, you have the U.S. powering ahead with that pretty blowout employment figure as well, vaccinations full speed, whilst in Europe, Italy, France, Germany, and elsewhere, there's more restrictions, not enough vaccinations. Does that create a real divergence that could be longer than we're expecting it?
Well, listen, I think the vaccine debacle in Europe, it's a testimony of what's wrong with Europe. Basically, in Europe, people at commission level, they all come from backgrounds which are legal administration. No one has ever run any business. No one has actually ever created anything. They're all either politicians or bureaucrats. And so we manage now to have, less than 10% of the population in Europe vaccinated. UK and US are around 50%, 50. So if you were playing in a football match, it's 5-1. That's how much Europe is losing. So I think this is a massive wake-up call. Less paper, less, prohibition, and stimulate research, entrepreneurialism, risk-taking. And I think as a result, the fact that a country like Germany can be put on its knees because they don't have vaccine. One, their researcher and the key vaccine, the Pfizer one, was created by 2 German scientists, I think is a full debacle of Europe. And I hope as a result we have more risk-taking, more Anglo-Saxon culture in taking risk, in creating companies, rather than just subsidy and prohibition and what you can do and not do. And ultimately vote for European risk. This means 3-4 months delay. But I think the lesson is so strong that unless Europe learns it, then it will pay the price for decades to come. And I think the green transition could be a huge opportunity to create that industrial competence, that could then be sold to the rest of the world. Pretty much how, the digital competence in the US in China has made inroads globally.
Davide, thank you so much. We'll get you back on very soon to talk also about Italy, and we'll ask Mr. Gentiloni of the European Commission about, of course, the Recovery Fund. Davide Serra, Algebri's chief executive there, speaking to us exclusively. Now, coming up, as Credit Suisse shakes up the ranks of the aftermath of the Archegos blow-up, we bring you the latest on the developing story throughout the program. Plus, the EU approves a €4 billion debt plan for Air France KLM to help weather the pandemic storm. We'll be speaking to the airline's chief executive just after 10 a.m. UK time. This is Bloomberg.
Okay, traders, I would have to cancel Bitcoin order to sell short because it took a while, first of all, and then right now it changed its direction, and it probably I would have to buy in the near future, not sell. So order to sell short Bitcoin at 59,000, cancel. So you need to do the same if you want to trade Bitcoin, and please do wait for another information until we will get confirmation from our strategy indicator, and we'll let you know when we're going to trade Bitcoin.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Emily Chang explores how a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
Economics, finance, politics. This is Bloomberg Surveillance, the edition. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Good morning, Francine. North Korea says it won't participate in the Tokyo Olympics in order to safeguard its athletes from COVID-19, making it one of the first countries to skip the games because of the pandemic. In the US, New York City's vaccination program picked up speed last week, reporting a record of more than 500,000 doses administered. Brazil, meanwhile, says it will vaccinate 2 million people per day next month, a doubling of the planned rate for April. Boris Johnson has confirmed that some restaurants, pubs and shops will open again from next week as England's lockdown is eased. The UK Prime Minister set out plans for a first step in reducing restrictions as the country's vaccination programme reached more than 31 million people. However, in a setback to the airline industry, the government said it's not yet clear that non-essential international travel can resume as planned next month. US Treasury Secretary Janet Yellen has outlined the case for a uniform corporate tax rate across the world's major economies in her first major speech on international economic policy. She said the US is working with G20 nations to find an appropriate minimum rate. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Francine.
Laura, thanks so much. Now, coming up, the IMF and the World Bank spring meetings takes place virtually this week. We speak to Paolo Gentiloni of the EC.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty
extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
The hits keep coming for Credit Suisse. The Swiss lender says that the Archegos implosion will cost almost $5 billion. It says it will cut its dividend and replace 2 top executives. Wiping out the losses, European stocks hit a record high with the Stoxx 600 wiping out its pandemic slump. Warnings emerged from Howard Marks, Nouriel Roubini and Carson Bloch about froth in the market. Plus, Air France gets 4 billion euros from the French government after getting EU approval. We speak to the European Economy Commissioner Paolo Gentiloni next, and then the airline's chief executive just after 10 a.m. UK time. Well, good morning, everyone. I'm Francine Lacqua here in London. Welcome to Bloomberg Surveillance, the early edition on this Tuesday, the 6th of April. Now, a big shakeup is underway at Credit Suisse. The lender, hit hardest by the collapse of the Archegos Capital Management, this morning announced sweeping changes, including a dividend cut and an overhaul of some key personnel. Well, joining us with the latest is our Danny Berger. Danny, good morning. What kind of losses is Credit Suisse actually facing, and how's that playing out in today's trading session?
So the figures that they have announced is a $4.7 billion hit from Archegos itself. I just wanted to put it on the chart. It's that bottom red line over here, just in the context of their quarterly profit and loss. I mean, it is such a staggering figure. Last year alone, $2.8 billion is what they brought in net profit. So, I mean, this is something that was able to wipe out the entirety of first quarter gains, now seeing a 900 million Swiss franc loss, despite the fact it was a very strong quarter in terms of both things, investment banking and asset management as well. Now, in terms of the share price reaction, however, it isn't a big hit today. It's just down 0.3%. At one point, it was up 2% today, but analysts at RBC say that shares are getting some relief because the most bearish scenario didn't necessarily play out. But I should say, Francine, we don't necessarily know the entirety of costs yet. Presumably, there'll be some operation costs around this, how they're going to change things like their prime brokerage. And Credit Suisse, in a statement today, also saying that over the next few days, they plan to release some more details on Greensill and some of the shareholder repayment on that. So that could be yet another cost stacking up for Credit Suisse.
So, Danny, talk to us about some of the personnel changes. And is that it, or how much of the blame could actually go also to the top tier?
So at this moment, it stops from going to the very, very top. That is Thomas Gottstein. It doesn't necessarily go there, but we are seeing Brian Chin departing, who's the chief at the investment bank, and also the chief risk officer, which is Laura Warner. Now, a Bloomberg memo did show some other departures, about 5 or so, most of them in risk management operations. But Gottstein himself says, look, this is really something that they're going to learn from as well. In the statement, he had a lot of details on that, saying that, look, they realize that this is a significant hit for shareholders and the lessons will be learned, is what he said. A very difficult situation since 2021 was supposed to be his year where he had a blank slate between Greensill and Archegos. It's not quite that, Francine.
Thank you so much, Danny Berger there with the very latest on Credit Suisse. Now, the world economy is on course for its fastest growth in more than half a century this year. But differences and deficiencies could hold it back from reaching its pre-pandemic heights anytime soon. Now, the U.S. and China are leading the recovery, with the euro area and most emerging markets lagging behind. The International Monetary Fund and the World Bank spring meetings will take place virtually this year. The guardians of the global economy will gather to assess the damage and chart a path forward. Well, joining us now to discuss about this is Paolo Gentiloni. He is EU Commissioner for the Economy and former Prime Minister of Italy. Commissioner, thank you so much, as always, for giving us a little bit of your precious time. When you look at Europe and the trajectory forward, is there a danger that Europe will actually do much worse than the U.S. because of vaccination and because of the growth outlook?
Well, I'm quite optimistic on this because, of course, yes, Europe is lagging behind on vaccination a few weeks probably. We had a slow start, any doubt, but I think we are catching up. The first quarter we distributed more than 100 million doses of vaccines, and more than 300 million doses are expected to be distributed in the second quarter. And our economic outlook remained a positive one of around 4% in our last forecast. So I think that this 4% of growth is not a negative figure for Europe. Of course, we are considering what the US administration is doing with a very, very large package of support. This package will also help European economies from our point of view. So I am a little bit more optimistic on the fact that we will definitely have growth, but we have to deliver on vaccination and on the recovery plan funded by the European Commission.
Yeah, so Commissioner, how worried are you actually about delays in dispersing the money from the recovery fund and also the disbursement and ratification in Germany because of the Constitutional Court being invoked?
Well, we are quite confident on the fact that the legal basis of what we decided for this recovery plan is a strong legal basis. And by the way, we are also confident that, as always, this will not be stopped by single member states' constitutional courts, including the German one. We are ratifying the process, and we are discussing national plans. National plans will be submitted this month to for the final approval of the Commission, and the target is to have them finally approved with the first disbursement coming before the summer pause. Of course, this is a not quick process, but we have to consider what the European Union is. We are not a federal state, and we have made an unprecedented choice in having common debt for common purpose. And this justifies also the fact that we are very seriously discussing what kind of added value from this common debt could come for the European countries.
But, Commissioner, so are you confident, I mean, on the last 2 points that you were talking about, first of all, are you confident that there's another way of getting the money out, even if there's a delay in Germany? And number two, I think you talked about a timeline before the summer recess. Is this if the German Constitutional Court issue is resolved, or even if it's not resolved?
I think it will be resolved. And this, of course, is a condition to stay with our timetable.
The French president, Mr. Macron, said basically last month that there needs to be more recovery in Europe. Could you expect or hope for the recovery fund to get bigger or to be prolonged? Or could we, start talking about another recovery fund?
Well, as always, we have to, in some way, mix what we are doing at member state level and what we are doing at federal, if you want, but this is not federal, at the European Union level. If we mix these two kind of interventions, we had a strong reaction. Comparable in 2020, a little bit less, but comparable in 2020 to the one coming in United States. What will happen in 2021? The European Commission is still convinced of the fact that member states should continue to support their economy. And this, coupled with the 750 billion euros of the common European plan, could be a sufficient support. Of course, if we withdraw prematurely supportive measures at national level, making a mistake from our point of view, we will have not sufficient support. So sufficient support is something mixing the two streams, the national support and the federal, if you want, the EU level support. The two of them are very significant, and this justifies the outlook that we have of a 4% that we will check again beginning of May with our summer forecast.
Commissioner, Janet Yellen yesterday was talking about a minimum corporate tax level globally. Is the U.S. working on the EU on a plan like that?
I think it's very good news. One of the main result of this new, if you want, multilateral atmosphere that we have with the new U.S. administration and strong possibility of cooperation in the global arena, one of the main results could be finding agreements on global taxation. And we have this discussion going on since years at OECD level, and we need a breakthrough in this discussion. I think it is possible. We need a breakthrough on both the pillars of this discussion. We are discussing a minimal corporate tax, and we are discussing digital taxation, and we need to reach an agreement because these two reforms of the global taxation systems go hand in hand.
So how exactly does it fit with the OECD, and how does it fit with your own plans? Is it, a match, or are there still discussions with Treasury in the US to try and come up with a more comprehensive plan?
Well, we are quite satisfied of the first decisions taken by the U.S. administration and Janet Yellen in particular. She decided to drop the proposal of a safe harbor on digital taxation for U.S. companies, and this is the basis to find a common agreement. And the commitment on minimal corporate taxation is so important in this moment. If we want a real recovery from the COVID crisis, we need spending for public goods by governments, and to have this, we have to stop the race to the bottom on corporate taxation. So we have very good news, but of course the discussion on the details of these two agreements, digital and minimal corporate taxation, are still going on, and we hope that an agreement could be reached in the first semester this year.
Commissioner, finally, the EU Commission approved this big bailout funds for Air France. Do you see the need for more of those types of supports from major companies, given the situation of lockdown being extended in Europe?
Yes, I think one of the main decisions that we took exactly 1 year ago was to suspend our normal rules. And this happened both for fiscal rules and making possible the support of member states in the crisis, and at the same time we suspended the rules of our state aid. And this made possible the support to companies, including Air France, as you were mentioning. This wouldn't be possible with previous rules, but extraordinary and temporary rules are absolutely justified if we want to react to the crisis we are in.
Thank you so much, Paolo Gentiloni. They're the EU Commissioner for the Economy and former Prime Minister of Italy. Now, coming up, we'll have plenty more on Credit Suisse, shaking up the ranks in the aftermath of the Archegos blow-up. The latest on that developing story is next. This is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Let's get straight to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Thanks, Francine. Well, heads will roll. Credit Suisse is to take a $4.7 billion write-down tied to the implosion of Archegos Capital Management. Two top executives are also to go after a series of scandals raised questions about the bank's risk management. The shakeup comes as Credit Suisse posted a pre-tax loss of about 900 million francs for the first quarter and cut its proposed dividend. BP says it expects to have reached its 35 billion net debt target during the first quarter of this year. Hitting the target means the oil major can restart share buybacks. BP says the achievement is down to earlier than anticipated disposal proceeds and what it calls a very strong business performance driven by trading and prices. BlackRock is examining its businesses to see how it may have contributed to racism in the financial system, breaking ranks with its Wall Street peers. The world's biggest money manager is planning to undergo an independent racial audit of its operations following a shareholder request. And that's the Bloomberg Business Flash. Francine.
Laura, thank you so much. Now, the U.S. Treasury Secretary Janet Yellen has made the case for a harmonized corporate tax rate across the world's major economies. She says it's necessary to halt the, quote, race to the bottom between nations.
President Biden's proposals announced last week call for bold domestic action, including to raise the U.S. minimum tax rate and renewed international engagement. We're working with G20 nations to agree to a global minimum corporate tax rate that can stop the race to the bottom.
Well, joining us now with the very latest is Bloomberg's U.S. government editor, Kathleen Hunter. Kathleen, why is this change in tone so significant for allies?
Well, I think it just really marks an about-face from what we heard in the previous administration during the Trump era. That was all America first. This is really focused on working with the international community. It's really, if you take kind of a 30,000-foot view, not that dissimilar from what we're hearing, or very in line with what we're hearing from Anthony Blinken at State, what we're hearing from the Defense Department. So across the board, I think it's a marked shift in the approach of the United States towards the world. And so I think that, as we just heard from your previous guest, that's being welcomed, in international circles. It's being welcomed in Europe. But, the devil remains in the details, and getting this actually enacted at the OECD level, even enacted at the, domestic U.S. level is going to be tricky, to say the least. So I think this is certainly a step in the right direction, but, Congress still needs to act. This is still something that the international community would have to reach agreement on, but I think it's being welcomed at the international level right now.
It certainly is. Paolo Gentiloni just responded very positively to this. How tricky, when you mean by tricky, is it possible that, in 12 months, in 24 months, we won't have anything concrete to say yet?
I think that's absolutely possible. Again, even just yesterday, Biden put forward this, even just at the domestic level, yesterday after Biden put forward his proposal last week that would impose, the 21% global minimum tax on foreign profits. Yesterday we heard 3 Senate Democrats who were Biden's own party, Ron Wyden, Sherrod Brown, and Mark Warner. They basically have an alternative plan to that they've put forth. And so even on the U.S. level, even within Biden's own party, getting agreement on moving forward on something like this is not a done deal. And so I think there are many, many moving parts still, and getting those parts to align, particularly in, something like 12 months' time, is going to be certainly a pretty heavy task. And, we do know that the tax components of Biden's proposal are the most controversial. So I would expect there to be a lot of change at the congressional level, potentially a lot of alterations to those.
Kathleen, thank you so much. Bloomberg's U.S. government editor Kathleen Hunter there. Now, coming up, Credit Suisse shakes up the ranks in the aftermath of the Archegos blow-up. The latest on that developing story is next. This is Bloomberg.
Minority myth wasn't something that was fabricated by the Asian Americans. It was created as a tool to alienate the Black and the Asian American communities, and it was incredibly successful.
We know the racism didn't begin yesterday. We know it's probably not going to end tomorrow, but it is our job to make sure that there's progress and we keep people safe, give people dignity.
And I spent a lot of time last year to just listen, to understand, to reflect, and understand what I could do as a leader of this organization.
For many years, we've been very shareholder focused, and now there really is much more of a community requirement.
The economic downturn in the U.S., we're seeing unemployment and income losses affecting women more than men.
2/3 of the jobs lost in South Africa were women's jobs. So I think we're in a moment of crisis.
Clearly, our societies are reproducing, not reducing inequality.
We need better public policy and we need companies to step up.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
It is highly likely that we are going to have another situation like that. These things, when they come, we're experiencing Sonali, where out of the blue you hear of some major loss somewhere, they tend to continue to cascade until the market corrects and flushes the risk out of the system.
Guggenheim Chairman Scott Minerd there saying it's only a matter of time before another firm implodes in a manner similar to Bill Hwang's Archegos Capital Management. Now, Credit Suisse, the lender hit hardest by the collapse of Archegos so far, this morning also announcing sweeping changes, including a dividend cut and an overhaul of some key personnel. Now, let's get more with Bloomberg's finance reporter in Zurich, Marion Halftermeyer. Marion, thank you so much for joining us. I know you've led a lot of our groundbreaking, news-breaking stories on this. What are the consequences for Credit Suisse from the Archegos collapse?
Hi, thanks, Francine. Yes, so there are some pretty big consequences here, not only just reputationally, but financially. They've announced a 4.4 billion Swiss franc charge, and that will also lead them to a first quarter loss. Now, that follows a fourth quarter loss that already surprised investors. So this doesn't look good for shareholders, investors. They're not happy, and certainly clients are probably questioning, what exactly is going on now. Now, some of the news that came out this morning also led an overhaul of some of the personnel that were involved in Archegos and previously the supply chain finance funds, which were a problem earlier in March. So we've seen the risk officer and the head of the investment bank both stepping down and being replaced.
So, Marion, will the changes actually satisfy shareholders and investors?
Yeah, that's a key question. I mean, shares have been down quite a bit as these news come out. They're sort of ticking back a little bit today. I think that indicates that investors are liking the changes that they've seen announced. You'd certainly see the bank taking a strong take on how to actually resolve these issues, a wide sweep through the risk division. They're going to have to beef that up now. They're going to have to hire new people. And certainly they'll be interested to see what the new chairman, who's coming in at the end of the month, might also do.
What exactly is next for the bank? I mean, they've gone through a rough patch. How can they get back on their feet, as it were, Marion?
Yeah, I think that'll certainly take a couple months more. I think key will be first making sure that we know all of the losses have been taken or all the hits have been announced. There are still some outstanding positions with regards to Archegos. We still don't know the outcome of the supply chain finance funds and whether investors there will be made whole and whether it will be a financial hit. There might be some litigation that comes out of that. So there's still many questions in the near term that makes the question of, are they going to get back on track reputationally, a more medium to longer term question at this point.
Marion, thanks so much. Marion Halftermeyer there, our finance reporter in Zurich. Now, Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons out of New York. We'll have plenty more market checks. We'll talk about Credit Suisse. We'll also talk about the E-Recovery Fund. And we'll talk about Air France with the Commission approving its big bailout. This is Bloomberg.
That Norway sells way more electric cars per capita than the U.S.? Norway. Well, I won't stand for it.
In this neighborhood just outside Oslo, the majority of cars are electric.
Last year, Norway became the first country in the world to sell more electric cars than any other.
In December, EV market share was at 67%. In 2025, the country wants all cars sold to be zero emission.
Hey, Norway, listen up, you fish-loving... Oh, this place is adorable. Damn it.
But why is Norway leading this development? The country is rocky, it's ice-cold, and with huge distances. The easy answer is politics. By giving the consumers benefits that pay off, more people will go electric when they're getting a new car. These perks could be no VAT when buying the car, reduced tolls, the possibility to drive in the bus lane, and quite a bit of free parking as well. 2021 is an election year in Norway, and the Climate and Environment Minister Sveinung Rotevatn believe the EV perks will be a hot topic in the campaigns, where removal of the perks is set to be a central issue.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Tell us something you're doing that doesn't work out, where you've failed or something you can say you're not good at.
Let me tell you something. There is plenty that I am not good at and plenty that I've failed at, but I'm not afraid to fail.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
The world has to come together to bring the COVID pandemic to an end everywhere.
On that basis, I can confirm that quarantine-free travel between New Zealand and Australia will commence in just under 2 weeks' time.
We can't be complacent. We can see the waves of sickness afflicting other countries, and we've seen how this story goes.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lyons.
Well, good morning from London, Berlin, and New York on this Tuesday, April 6. Our top stories today. Markets on a roll. European stocks set a record the day after the S&P 500's all-time high, but there are signals a rally could be put on hold. Credit Suisse pays a price. The bank takes a $4.7 billion hit from the Archegos meltdown, and 2 top executives lose their jobs. And London faces the future. Mayor Sadiq Khan discusses his plans for reviving the city as he looks forward to a second term in office. A lot going on in the markets. The markets focusing, of course, on that better-than-expected number. Jobs leading to higher markets yesterday, but with new restrictions in Europe. Kaylee, how's it playing out today?
Well, Francine, it's interesting. Welcome back, by the way. I missed both you and Matt yesterday. But while Europe was enjoying Easter Monday, we did see those record highs. But the risk sentiment did not follow through in the Asian session. Of course, Hong Kong stocks weren't open today. They are still on holiday. But we were down 1.3% on the Nikkei in Japan. And Chinese stocks were down by about 0.4% as well. That's as reports show that the PBOC has asked banks to curtail loan growth for the rest of the year. That could pull liquidity out of the stock market and weigh in some of those richly valued stocks. Quichao Mutai is one of them. It was the biggest drag for the CSI 300, down 1.7% in the Asian session. Also, I would just note in FX, dollar yen sitting at 110.44. The dollar about 0.25% stronger against the yen. In Europe, though, as you alluded to, Francine, it is much more risk on. Green all across the screen. We're up about 1.3% in UK stocks, and European stocks are at record highs on the Stock 600 with its gain of about 0.8% today. Of course, the one stock story we are watching is Credit Suisse. That $4.7 billion write-down, cutting the dividend, halting the buyback, replacing 2 executives. That Archegos fallout just continues, but the shares are actually up about 0.6% in the European session. Maybe a lot of that bad news was already priced in. Here in the U.S., record highs yesterday. We aren't seeing follow-through buying this morning. However, futures pointing to a lower open. Of course, it was big tech that led the way yesterday, but NASDAQ 100 futures are down by the better part of 0.3% as we see yields basically steady. We're up just a basis point on the 10-year. 1.71% is where we sit. And keep an eye on oil as well ahead of those Iran negotiations happening in Vienna, that nuclear deal. That talks about the fact that that could mean more supply coming back onto the market. Took crude down 4.5% yesterday. Maybe now the market isn't seeing that as all too likely. WTI up 2%. We're sitting just shy of $60 a barrel, Matt.
Yeah, interesting to see those still holding under $60 a barrel, Kaylee, and that the U.S. futures haven't gotten a little bit of a boost from the big gains that we're seeing here in Europe today. Let's take a look at what's ahead, what should be on your schedule. Big day for international relations. European Commission President Ursula von der Leyen and Council President Charles Michel meet with Turkish President Erdogan in Ankara. See if they can kind of smooth things over a little bit. Italian Prime Minister Mario Draghi takes his first foreign trip as Prime Minister to Libya to try and assess the situation there. And the U.S. and Iran hold indirect talks on the 2015 nuclear deal. That's something we've been covering and will continue to today. Also today, the IMF releases its World Economic Outlook. Bloomberg will interview Chief Economist Geeta Gopinath at 10 a.m. New York time. And those IMF World Bank spring meetings, Francine, will go on this week. A lot to look forward to at those, including more talks from Yellen and talks from Jay Powell as well.
Yeah, Matt, I'm looking forward to IMF. Even if it's virtual, we actually started strong with Paolo Gentiloni, so I know there's going to be a lot of economics news out there, especially with restrictions in Europe. We'll see how the bigwigs think how it will pan out. Now, a big shakeup is underway at Credit Suisse. We've been talking about it all morning. The lender hit hardest by the collapse of Archegos Capital Management has this morning announced sweeping changes, including a dividend cut and an overhaul of some key personnel. Well, joining us for more on this is our Danny Berger. Danny, first of all, how's the bank actually reacting to its losses from Archegos? Have they gone far enough in trying to clean it up?
I think that's going to be the big question. I mean, so far, share price is more or less flat. But then again, a lot of the bear case was already in there. But there are big sweeping changes. So in that regard, it perhaps could be enough. Recall $4.7 billion. That's the figure they announced today in terms of the hit they're taking from Archegos. That's enough to completely wipe out the first quarter profit. They're now seeing a loss for the first quarter. And put in context, $2.8 billion was all that they had for their net income of 2020. So that's more than a year's worth of profit. So in terms of the big changes, we have Brian Chin, who's the chief at the investment bank. He is leaving, as is Laura Warner, the chief risk officer, as well as some others in the risk departments. We're seeing bonuses slashed for a lot of the top executives. And as you said, Francine, dividend cut, buybacks also put on hold. The question now is, how many more costs could we see? Again, as I said, Credit Suisse actually up 0.6% so far. Recall it fell 25% in March.
Yeah, Danny, we also heard from a couple of investors basically saying that there could be more Archegos out there. What does that mean?
So it means that we could potentially see more events like this when a hedge fund or family office, for example, have to grapple with excess leverage and perhaps not enough collateral. So Scott Minerd was one of the people who spoke about this yesterday. He talked to our colleague Sonali Basic. Let's take a listen to that.
It is highly likely that we are going to have another situation like that. You know, these things, when they come, like we're experiencing Sonali, where out of the blue you hear of some major loss somewhere, they tend to continue to cascade until the market corrects and flushes the risk out of the system.
So more risk potentially in the system there. For what it's worth, we're probably going to see a lot of prime brokerages look at their books, look at the collateral, see where there might be some of that excess risk. Credit Suisse, Thomas Gottstein says that lessons will be learned, Matt.
Yeah, if they haven't done that already, Danny, you've got to wonder what they're getting paid for, right? That seems like something they should have started doing last Monday. Danny Berger talking about more of the Archegos fallout and what we may see coming up. Let's get a check on the markets as European stocks set a record for the day, erasing the pandemic's losses. Laura Cooper, Bloomberg macro strategist, joins us now. So we've seen the European markets really come back in force. Is this all about follow-through on yesterday's S&P highs?
Well, it certainly does appear to be the case that there was some catch-up needed for European equities, and that's because European markets were closed when we had that strong payrolls report on Friday, when we had that strong ISM services gauge. So really there is some catching up. I think the question now is, given the risk to the European recovery around those sluggish vaccine rollouts, around the potential stumbles in that EU recovery fund, could we actually see just the pace of exceptional gains that we've seen through the first quarter continue to extend, or will we see more stumbles going forward?
Laura, here in the U.S., it was large cap technology that led the way yesterday. Has growth names like big tech and the equity market more broadly made their peace with the bond market? Can we tolerate 1.7% on the 10-year now?
Well, that certainly does appear to be the case. And I think the reason why we are seeing tech regain that leadership, at least for now, is the fact that U.S. Treasury yields are on the back foot. They're really struggling to get above that 170 mark. And I think that just raises the question of how much of this good news growth prospect is actually priced in. Now, I would argue that there is actually further room for Treasury yields to climb, because when we look at just the growth backdrop, consensus consensus has about 5.6% 2021 GDP growth, whereas high-frequency indicators suggest it could be much stronger. So that should provide an impetus to those real yields climbing out of that deeply negative territory, and that should further propel Treasury yields. At that point, though, I do think we would expect to see that rotation away from those still frothy tech stocks back into those value stocks that are going to benefit ultimately from that ongoing recovery trade.
All right, Laura Cooper, Bloomberg macro strategist, thank you so much. And I do want to take a look at some stocks moving in pre-market trading here in the U.S. There aren't many movers that are outsized to the upside, but the biggest gainer at this point in time is Duck Creek Technologies, a software company, reported revenue that beat estimates after the bell yesterday. It's higher by 3.6% before the bell. As a result, Stitch Fix is higher by 2.6% after being rated an outperform over at Evercore ISI. $78 price target. It's just shy of $50 in early hours, and we continue to see EV and green energy plays near the top of the pile. You have ChargePoint Holdings up by 3% and Plug Power up by a little more than 1 percentage point at this point, Francine.
Yeah, thanks so much. We'll also look at travel stocks. Coming up, the future of travel with the Air France-KLM chief executive, Ben Smith, after they had a pretty hefty package approved by the commission in terms of bailout. And then after that, we also speak to the London mayor, Sadiq Khan. This is Bloomberg.
It's such an interesting new world.
The world is changing. For us, it's not about being first, it's about being the best.
While everyone is zigging, we're zagging.
We feel like we can maybe help people out more.
We have an enormous number of big ideas.
Ultimately, it's billions of dollars from the government that will pull that vaccine through and purchase it for Americans and people in low-income countries.
This is Bloomberg Surveillance, early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now, Air France-KLM will receive as much as 4 billion euros from the French government. It's part of a recapitalization plan for the indebted carrier, which has been slammed by the pandemic. Now, the long-awaited package comes amid a surge in the virus and renewed restrictions in France. Well, joining us to discuss all this is the chief executive of Air France-KLM, Ben Smith. Thank you for joining us, Ben Smith. We'll get onto that in a second, but I just want to, first of all, understand the lay of the land. When are you expecting people to travel more? Could this, last for 12 months, 24 months, or are you expecting by the end of the year for the pandemic to be behind us?
Well, first off, we're quite pleased to see the numbers that have just been released in the domestic U.S. market. In some cases, actually exceeded numbers that we've seen in 2019. So that's very good news. We know in China, that the domestic market there is now above what it was in 2019. Here in Europe, with the delayed rollout of vaccines, we are expecting to get back to 2019 numbers later, lagging what we've seen in the US, but we are quite confident we will see that in the short to medium term. So we've had some new restrictions put in place in France that are, over the next couple of weeks, same thing in the Netherlands, but we are optimistic for the medium terms.
The French finance minister said this was not a blank check. So what will you do to make Air France-KLM more competitive?
Well, we have a number of elements that we have in place. Quite a few of them were we'd already started. We have been working with the various unions at Air France. We've made some very good progress. One of the most important was getting an agreement with the Air France pilots to enable our low-cost unit Transavia to operate in the French domestic market. This is a big change for Air France. The French domestic market is the most losing, or was the poorest performing market in the Air France network. So that's excellent news. And we have many other elements going on. We are simplifying the fleet. We were the first airline to make a decision to exit the A380s, and we have many other simplification efforts going on in place. But I would say overall, it is the evolution of many of the union agreements, the complex union agreements we have with the 17 unions at Air France.
It's only the French side that's been decided. Ben, Matt Miller here in Berlin. You still have to make a deal or get help from the Netherlands. When is that going to be concluded?
So on the Dutch side, there's no precise date for that. Just you have to remember that we went through a difficult 4-year transformation plan at KLM prior to the crisis, and also recently there have been Dutch elections that those have just taken place. The new government should be formed hopefully in the next couple of weeks, and that'll stabilize the situation in the Netherlands. So what we've seen so far, first set of capital strengthening measures in France that have been authorized by the European Commission decision that was released this morning, and that is enabling us to put out a capital increase of 1 billion euros, as well as a simultaneous conversion of the 3 billion euro French state direct loans into a perpetual hybrid super subordinated notes instrument.
You know, when I think about the French taking up to a 30% stake, and you've still got the Dutch deal to do, working with both governments, it seems like such a cumbersome company to have to deal with, tied down to two different national political spheres. How can Air France-KLM come out of this better off? It would seem to be more difficult to run after the pandemic.
Well, I would say you have to look at this in two ways. We have a governance structure with two big states, the French state and the Dutch state, that form part of that. And we have a management structure which is fully integrated, our three brands, so it's Transavia, KLM, and Air France. So on the management side, we don't see any change. We're actually quite pleased that our main shareholders fully support management, fully support our short, medium, and long-term plans. So that's very positive. And also, what we view as quite positive is that what's important to both states, so the Dutch state, the future of Amsterdam Schiphol Airport and the importance of that airport to the Dutch economy has been reaffirmed. And here in France, the importance of having a strategic tool with a strong Air France, also as part of the French economy, has also been reaffirmed. So these are fully in line with what we as management plan on doing. There's no misalignment between our shareholders and what we as management believe is necessary to ensure that Air France-KLM has a strong future.
Ben Smith, the Commission has asked to abandon some routes. Which routes will you abandon? And we also have a viewer question in French, so thank you to everyone. You can write in any language you want, asking, you know, where will the cost cutting come from now? Is it the routes? Is it somewhere else?
So we've been going through a transformation plan at both major companies within the group for some time. So it's an acceleration. Start with Air France, you know, as I said, simplification of the fleet and a major overhaul of the complex union agreements that we have at Air France. We do have 17 unions at Air France. Very, very complex structure. Made a lot of progress throughout the crisis, and we plan on continuing to move forward through that. I must say that the cooperation with all of our staff has been unprecedented. I have to go out and thank them. As you know, Air France historically has faced very, very difficult relations within the company. And if you look at what's taken place over the last year, trustful, respectful, very transparent way, I can continue doing that. In terms of what shape and form the carrier is going to take in the future, we're not looking at a reduction in the size of Air France. Overall, in the Paris market, we operate from 2 airports. So Paris-Roissy, Charles de Gaulle, and Paris-Orly. We have over 1,000 slots combined at those 2 airports, and we are releasing 18 slots as part of this revenue package.
Ben Smith, thank you so much, and we hope to see you very, very soon in person. Of course, good luck with all of your endeavors at Air France-KLM, Chief Executive there. Now, a little bit later this morning, we'll also speak with the Verizon Chief Executive, Hans Vestberg. That's at 6:30 a.m. in New York, 11:30 a.m. in London, and this is Bloomberg.
Asia is absolutely core to our business. It's almost 20% of our franchise revenues globally, which is significantly more than most of our global peers who are more in the mid-teens.
We want to invest, grow in China, but also we are also investing in the rest of Asia as well. Our top line growth for the region has been close to 24% last year, almost 20% of the group's revenue as a percentage of the revenue of the group. So, and this is where the group is counting on the growth.
We see company after company, these are corporates committing to net zero. So pretty much across the board, there is an enthusiasm for putting capital to work to try to get us to a better carbon future.
Credit Suisse has a fantastic brand name in Asia. We have obviously strong positions in Singapore and Hong Kong as our 2 main hubs, but across the region.
Madame Lagarde, has the balance of risk actually shifted since the last policy meeting?
Well, our balance of risk is still tilted to the downside in the short term, but it is much more balanced in the medium term.
What are markets exactly playing at the moment? They seem to be continuing testing central banks.
They can test us as much as they want. We have a mandate, we have an aim. We're going to be riveted to that, and we're going to do what is required.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Emily Chang explores how a chip shortage snarled everything from phones to cars on a Bloomberg television special, Chip Crunch, Wednesday on Bloomberg Technology.
This is Bloomberg Surveillance, the early edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get straight to the Bloomberg. First word news, and most European Union members will have enough vaccines for the populations by the end of June, beating the official target. Now that's according to an internal memo seen by Bloomberg. The EU wants to immunize 70% of adults by the end of the summer. There's hope its vaccination campaign will improve after a pretty disastrous start. U.S. Treasury Secretary Janet Yellen has outlined the case for a uniform corporate tax rate across the world's major economies in her first major speech on international economic policy. She said the U.S. is working with G20 nations to find an appropriate minimum rate. She also singled out China, saying the U.S. needs a strong presence in global market to level the playing field. And in sports, Baylor stopped Gonzaga's bid to become the first undefeated men's NCAA basketball champion in 45 years. The Bears beat the Zags 86-70 for the school's first national title. Jared Butler led the way with 22 points. Gonzaga finished the season with a record of 31.5. Matt, and surveillance was so close, and yet we didn't win.
But you did get 6th place, Francine. I'm very, very proud of you. I got a lowly 27th place, so clearly you are much better at picking the winner of basketball games than I am.
Yeah,
you
and
both,
Matt
you both did
play.
better than I did. Yeah, well, I mean, I played in the Bloomberg bracket, BRKT Go. Jenny Johnson, by the way, was the winner of that. But congrats to Romaine Bostick for getting second. We're going to talk to London Mayor Sadiq Khan next. This is Bloomberg.
This patch of land in northwest Saudi Arabia is going to become Neom, a city powered entirely by renewable energy. The government hopes the site, which is the size of Belgium, will be a clean energy hub, not only for the kingdom, but also the world.
This here is at the borderline between Mission Impossible and Suicide Mission. Lucky enough, so far we've just been on the right side of the line, yeah. But you know, it's very close to that. You know, this is just smoking. This is nothing ever I've seen or heard of the dimension, the challenge. You know, I'm not talking energy only. You know, but in its broadest context, including the geopolitical dimension, including the cultural dimension.
Neom will include a $5 billion hydrogen plant run on wind and solar energy. All of the zero carbon fuel it produces will be shipped to international buyers in the form of ammonia. When it starts operating in 4 years' time, it will be one of the biggest hydrogen facilities in the world.
can't explain Leon on the back of a set of PowerPoints and a video clip. You just need to be here. You need to, breathe it. And specifically the startup mode and, things happening, buzzes all around you here.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix in London, Matt Miller in Berlin, Katie Lyons in New York. Now, there's quite a lot going on in the markets. Of course, Matt, what the market is trying to figure out is you have a rip-roaring possible recovery in the U.S. and how that plays out in Europe with lockdowns, and we still don't have the disbursement, of course, of the recovery fund.
Yeah, I mean, we see the rip-roaring recovery happening in the U.S., adding 916,000 jobs last month. You had the ISM number on both manufacturing and services. Well, the manufacturing number was the best March number since 1983. The services number was the best March number of all time. So recovery in progress, it's safe to say. But the question I think a lot of market participants have is about taxes. Janet Yellen has said she thinks corporate minimum tax would be a good idea. And if that's the case, a lot of things would have to change.
Yeah, so we also spoke to the EU Commissioner, Paolo Gentiloni, who really welcomed that. And I think it's an overture from, of course, Janet Yellen and the U.S. administration to its allies, something that we hadn't seen under the Trump era. Kaylee, when you look at the markets, what are you looking at?
Well, I'm looking at Europe trying to play a little bit of a game of catch-up as European markets were closed yesterday when the U.S. hit record highs. That has the stock 600 at a record today. It's up about 0.6%, actually has erased its pandemic losses. Here in the U.S., though, we are taking a bit of a breather. It was big tech that led the way yesterday, but this morning NASDAQ 100 futures are down about 0.25% with 4 hours to go until the U.S. Open. Yields are basically unchanged on the 10-year, looking at very marginal movement. We're sitting right around 1.7, 1.71%, and the dollar is stronger against mostly everything in G10. The dollar spot index up by about 0.1%. As for what is moving in pre-market trading, the stocks I'm watching all are related to the key gospel out, and specifically Credit Suisse. It, of course, is taking a $4.7 billion write-down, cutting its dividend, halting its buyback, replacing executives. The shares are positive, the ADRs by about 0.2% in pre-market trading. Maybe bad news already priced in. But Credit Suisse also sold a number of block trades reportedly overnight, totaling $2 billion. And those stocks that were subjected, Viacom, CBS, VIP Shop, and Farfetch, are all down between 1% and 2% in pre-market trading, Matt.
All right, so a lot to watch in terms of markets. Interesting that Credit Suisse is on the rise, right, after you have all of those heads rolling and news about dividends and buybacks and $4.7 billion in write-downs for losses. It's really the tax issue that I think we could focus in on, and I've got a chart here that just shows really, it looks like, if you're listening on radio, this looks like a whole bunch of colored spaghetti. So the chart I'm going to work on, Hillary actually, I think, has already turned it into a bar graph. So if we refresh it, you would see that. But the point is that Ireland has a tax rate of only 12.5% compared to upwards of 25% for most other countries. You can see the UK sneaking in there at 19%, kind of in the middle of the pack. If there's a minimum, a corporate minimum tax, a lot of things, as I said, Francine, would have to change. Certainly, the Irish tax rate for big companies like Apple would be a lot higher.
Yeah, it certainly would. Now, turning to the UK, and the government has warned that the dangers of the pandemic are still present despite the success of the vaccine program. Now, the Prime Minister Boris Johnson said yesterday that the reopening of non-essential travel may be pushed back beyond May.
We can't be complacent. We can see the waves of sickness afflicting other countries, and we've seen how this story goes. We still don't know how strong the vaccine shield will be when cases begin to rise, as I'm afraid that they will.
But the Prime Minister did say he thinks London can bounce back strongly. Well, this all comes as the city gears up for the election next month, with everything from the economy to policing high up on voters' minds. Well, London Mayor Sadiq Khan joins us now after launching his re-election manifesto. Mayor, thank you so much, as always, for giving Bloomberg a little bit of your time. Now, it seems that the Prime Minister is intent on many conferences to actually break purdah and say, you know, that you haven't done a sterling job trying to vie votes for his candidate. He's breaking impartiality rules. Should he be taken off air?
Well, Boris Johnson has a habit of saying foolish things. You have to forgive our Prime Minister, not only for the way he looks, but for a lot of the things, a lot of the times, the things he says. We're quite clear. The election on May the 6th for the Mayor of London is an important one because our global city has been struggling, like many other global cities, because of this pandemic. There have been more than 300,000 Londoners who've lost their jobs, and there are currently just over 1 million Londoners who are furloughed. So I've launched my manifesto today, and it's a manifesto committed not just to protect the jobs we have, not just to support job creation, but to help those who've lost their jobs get back into work. And the way to do that is by having a green recovery. And what I've published today in my manifesto is a Green New Deal. And we can put aside the petty political knockabout stuff from Boris Johnson, and I'm keen to focus instead on a Green New Deal recovery for our city.
Okay, you're speaking to a very quiet city of London. Are you expecting bankers and Londoners to return back to work, and how quickly could that happen?
Yeah, very good question, Francine. I'm here in Bloomberg, actually, in the heart of our city, and there aren't many people about. When I came to Bloomberg, I cycled in. Bloomberg itself has taken huge strides to make sure they make their building safe. It's a COVID-safe building. It's fantastic. You come here, you're tested, social distance is taking place, and we're encouraging other employers to give their workers that confidence to return to work. You'll be aware many global cities, their city centre ecosystem relies upon footfall, the coffees, the bars, the restaurants, the tailors, the dry cleaners. We've got to recognise, though, that understandably people are a bit nervous returning to the city, but also people have been as productive at home because of the advances in technology. So we've got to make sure that the experience of returning to the city is a safe one. What I've done over the next few weeks is I'll be investing in making sure we have attractions in the heart of our city to encourage people to suck it and see, to see how it works. And then I'm hoping over the course of the next few weeks and months, people will start returning back to the city. In particular, we're keen to encourage not just tourists, but Londoners and others, including investors, to return back to the heart of our city. But it's important at all times we're vigilant and never complacent, because this virus is still with us.
So what does that mean for, vaccine passports? Should they come quicker so that tourists can return safely back to London? Or is the fall, the autumn, the quickest we could have them?
Well, at the moment, we're rolling out vaccines as fast as we can. The criteria we're using mainly is one of age. The older you are, the sooner you receive the vaccine, or if you're clinically extremely vulnerable. The good news is everyone now above the age of 50 should have received the vaccine. It's now being rolled out to those below the age of 50. London's population is, roughly speaking, 9 million plus. 3.5 million Londoners have already received the vaccine, but it will take some time for everyone to receive the vaccine. So discussions about a vaccine passport are a bit premature, but it's important the work is done now to see whether it's workable. In the meantime, there are things that can be done. For example, regular testing is a good way to see if somebody's got the virus. We know, I'm afraid, many people who have the virus show no symptoms. 1 out of 3 people show no symptoms. So regular testing is important. And the good news is our schools have reopened, and we've made sure each parent has sufficient tests to test their child twice a week. And the good news is we're not seeing a big increase in the virus now like we were last year when there wasn't regular testing.
When you look at the City of London, should we continue to try and pursue equivalence, or should we move on, Mayor, and actually accept that the EU access is no longer something that we'll get?
I'm afraid the bad news is, as far as the financial services is concerned, there is a no-deal Brexit. There isn't a deal with the EU as far as the financial services industry is concerned. The Chancellor is working on a memorandum of understanding. I'm hoping he reaches a deal with the European Union. It's really important for financial services, legal, accountancy, insurance, for us to reach a deal with the EU. I'm clear, though, that notwithstanding that the underlying strengths of our cities still are there, our unique ecosystem, life sciences, universities, culture, tech, our theatres, and so I'm hoping that when somebody's considering where to work, London versus, I don't know, Frankfurt, Brussels, Paris, love those cities as I do, they'll choose London for other reasons, aside from whether we have a deal with the EU or not.
But, Mayor, how can London remain attractive financially if actually it's barred from the single market? And what are bankers telling you that they will move to? What other capitals in Europe will gain from this?
Well, I speak regularly to chief executives, to bankers and others. The good news is no one's talking about leaving London. What there is happening is clearly operations in cities that are within the European Union for reasons that we all understand. I think they recognise that the London offers things that no other city by itself can offer. There are other great cities in the EU that can offer one or two things attractive to a bank or those in the financial services. London has it all. The big challenge for us is to make sure that our government, the Chancellor, reaches some sort of deal with the EU. I'm optimistic there will be a deal reached because it's in nobody's interest for us not to have access to the single market. But also, I think the EU recognises any jobs from London won't go to cities in the EU. They'll probably go to New York, Singapore and Hong Kong. That doesn't benefit the EU.
Right. Mayor, should cannabis be decriminalised?
What I've announced over the weekend is an independent commission looking into that very issue. I'm well aware of the impact drugs has on violent crime in our city. I'm also well aware of the health impact it has. I'm also well aware of how young Londoners are often criminalised because they're in possession of a small amount of cannabis. What I've announced is, should I be re-elected on May the 6th, I'll set up an independent commission to look at what's happening across the globe where they've decriminalised cannabis, but also see what lessons we can learn in our city. And that commission will make recommendations to me, and I'll use that evidence-based approach to decide on policy rather than my gut instinct or knee-jerk reaction.
And your gut instinct is?
I'm concerned about many young Londoners being criminalised. I'm concerned about the health impact on many people because of cannabis, but also I'm concerned about the impact of crime, of drugs generally on crime. I'm not in favour of decriminalising Class A drugs, but I think it is worth exploring the issue of cannabis and those sorts of drugs.
Mayor, thank you so much. Mayor of London there, Sadiq Khan. And of course, we'll have plenty more on the UK. We'll look at banks and markets coming up. Now, coming up, European stocks following the S&P to an all-time high. We speak with Christian Muller-Gleesman, Goldman Sachs Managing Director and of Portfolio Strategy and Asset Allocation. This is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
and the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Extraordinary market day.
This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
We're seeing widespread frothiness, bubbles, and restaking and leverage. This is the phenomenon you see with the cyclically adjusted P ratios now being at levels they haven't seen since 1929 or 2000, when there was a bust of bubbles. We've seen now these frothiness in other financial markets, the SPAC phenomenon, the crypto phenomenon, the blow up of some hedge funds. So I think there is generalized frothiness as money is very easy, liquidity is very easy, and people are taking too much risk.
Nouriel Roubini, there, professor at NYU's Stern School of Business, speaking earlier on Bloomberg. Now, joining us is Christian Muller-Gleesman. He's a managing director of portfolio strategy and asset allocation at Goldman Sachs. Christian, thank you so much for joining us. More and more bigwigs are saying, look, there's something dangerous in the markets, be it Archegos, a possible other Archegos being what central banks are doing, the prospect of inflation, and the fact that Europe is so far behind the U.S. Where do you see the most risks in the markets right now?
Yeah, no, I think obviously the kind of pressures you've got from higher bond yields are something we're monitoring closely, because the low level of bond yields has been critical in underpinning these very high valuations, which means, like, at the margin, at some point, risk premia are not large enough to buffer further increases. But we don't think we're there yet. I think especially for equities, there's still more risk premium to buffer higher bond yields. I think there is a pressure, of course, of deleveraging. If you do get bond yields move higher and higher, there's a potential that you do get pressures of deleveraging. But again, if you do look at the levels of bond yields where we're at, we cannot really say that the levels are yet at a point where that should become a major concern. I think what's critical to also keep in mind is obviously the interaction with growth. I think you're dealing with incredibly strong growth. And as long as that's the case, it's not so easy to see major deleveraging pressures or kind of to expect like a major correction.
But Christian, what is that point? So is it a level on bonds, on yields that you're looking for, or is it, you know, how fast they get there?
Yeah, it's always level, speed, and source of the bond yield increases that matters for us. I think what the story of the first quarter was really speed. I think the bond sell-off was a bit too fast, and to some extent the drivers have been a kind of misunderstanding and concern with regards to Fed policy and the Fed's reaction function with regards to kind of the first hike and to some extent the tapering. And we've gone through that now. I think the Fed has been repriced quite significantly. There's like 3 to 4 hikes priced in 2023. You could argue that's a lot of risk premium now, which we would argue is probably too much even. There might be some priced out. So I think from now, the debate is increasingly on level. And I think we obviously, in terms of the 10-year Treasury yield, while we are much higher than where we were a year ago, we're still incredibly low in a very long-run context. And as a result of that, we're not that concerned yet. Historically, levels where equities really struggled with higher bond yields were probably closer to 3.5. One could argue that level is lower now, considering valuations are maybe higher, considering global growth from a trend point of view is possibly lower. But we would argue we're not there yet. I think what I'm watching in particular is the 5-year TIPS yield, which is essentially measuring the long-run expectations of real yields from the market. And they are still 40 to 50 basis points before, at the levels before the COVID-19 crisis. So you can really argue that there's a lot of normalization to getting something more normal in the back end before you're really reaching, you could say, levels that are possibly a bit more scary.
What kind of levels will we reach? Are we going to be over 2% on the 10-year by year end?
I mean, our forecast is 1.9. But I think there's a very good chance that you're overshooting in the second quarter because you're dealing with a peak growth momentum, and we're dealing with an incredible pressure from a fund flow point of view as well, where I think you haven't really seen major outflows out of bonds and out of both corporate bonds and kind of government bonds. And it's been a pretty tough return period now. So as you see that acceleration of growth going into the second quarter, first in the US, possibly a bit later in Europe, I think the pressure on bond yields will continue. So I think we've looked at scenarios where bond yields could go to 2.3 in an overshoot scenario, but it's a bit limited how much bond yields can actually move higher for two reasons. First of all, the term structure is already incredibly steep. And as a result of that, you're pinned by the front end. But I think the other thing is global demand. Global demand for treasuries is really picking up, because if you currency hedge the treasury back into euro or Asian currencies, it starts to look really attractive.
Well, Christian, what does that global demand for treasuries mean for the dollar? Is dollar weakness ever going to show up?
Yeah, I think we think there is definitely a space for dollar weakness to return, but you're in a tough spot right now, exactly as you said. First of all, you get this incredibly steep treasury curve. You see real yields pushing more positive. That kind of drives a bit for US dollar fixed income from international investors. And related to that, you're dealing with a bit of a desynchronized reopening, because the US is recovering a bit earlier. And you've seen that with the ISM services, this really large jump. You get some really blockbuster data in the US, whereas Europe is falling a bit behind. Emerging markets are also dealing with specific issues. So we would think that the current window for dollar weakness is not so good. But I think as we progress into the second quarter, and Europe in particular starts its reopening process, we think that especially the euro could start to appreciate versus the dollar.
Christian, what's the market got wrong? What's the most mispriced asset out there?
I think to me there's...
Hello, traders.
Mispricing is really...
Hope you're all right today. I'm going to place an order to buy euro. The price I'm looking to buy, 118.10. Okay? You still have time. If you want to buy euro, you can place an order to buy at 118.10. Okay? So I'll speak to you later when we will get filled, and if you still have time. So if you want to trade this pair, please follow my trades. All right, I'll speak to you later, guys.
Take some of their credit holdings, maybe go into low risk equity, maybe actually go short volatility in equities to replace credit. I think these are interesting relative value opportunities.
Thank you so much, Christian Müller-Gleesman, there, Managing Director of Portfolio Strategy and Asset Allocation at Goldman Sachs. Now, coming up, the IMF is releasing its World Economic Outlook today. We'll speak to the Chief Economist, Gita Gopinath. That's at 10 a.m. in New York, 3 p.m. in London, and this is Bloomberg.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lackman, London, Matt Miller in Berlin, Kelly Lyons in New York. It's